Good morning, everybody, and welcome and thank you for joining us for our webinar discussion today on all things taxes, our favorite topic these days to talk about. We're really excited to share with you an overview of House Bill 8, which is a bill that was passed by the General Assembly this past session that will further reform our tax code in Kentucky. And this was one of the top issues for the business community going into the 2022 legislative session. We saw in 2021, so many states reform their tax codes and reduce their individual income tax. And then in 2022, while the General Assembly was in, we saw additional states, competitor states of ours, Indiana, Ohio, North Carolina, also make announcements for reducing their individual income tax. We knew this had to be a top priority of the 2022 session. We knew that we had to continue reforms to our tax code, continue from the 2018 and 2019 reforms so that we could continue to be competitive with other states and grow our economy. So we were thrilled to see this bill pass this legislative session, House Bill 8. And we're going to talk a little bit about what's in the bill and what you need to know as business leaders as it is implemented. You can actually read quite a bit about House Bill 8 in our newly published Results for Business. There's also a summary of so many other pieces of legislation that passed that we worked on, lots of different bills related to our workforce challenges. There was legislation to reform the unemployment insurance system, legislation to freeze the unemployment insurance tax for another year, which will save you all about $75 per employee this year, as well as legislation to tackle some of our childcare issues that we have and as it relates to barriers to work. So really great session for the business community this year. It is all summarized in Results for Business, which we published just this week, and you can find it at kychamber.com. I'll put that link in the chat in a little bit. And you can read all about what the General Assembly did for business and how it saved you about $1.2 billion with another $1.4 billion in investment. So great stuff this session. But today we are going to be focused on House Bill 8 and the legislation that reformed our tax code. And I'm really excited to have with us today Rachel Chamberlain. She is an attorney at Frost Brown Todd, and she specializes in state and local taxation and nonprofit taxation. She is a graduate of the University of Kentucky College of Law and currently serves as the chair of the taxation section of the Kentucky Bar Association. So welcome, Rachel, to the webinar today. And I'll give a couple of housekeeping notes before I turn it over to her. This webinar will last maybe up to about 45 minutes, maybe a little bit shorter, and we have reserved some time for Q&A. You can use the chat feature on your screen to ask questions. So as you get questions or as questions come up while she's speaking, go ahead and type them in. And we are recording this webinar, so if you want to refer back to what we discuss and what Rachel talks about, we will be posting a recording of the webinar later today. So keep that in mind as well. So with that, Rachel, again, thank you for joining us. I'm going to turn it over to you for a summary and some of the highlights of House Bill 8.
Thank you, Kate. So as Kate said, my name is Rachel Chamberlain, and I am a member in the Florence office of Frost Brown Todd. And I have been practicing state and local tax for going on 8 years now. And because I've been doing it for the last 8 years, this is now the third type of tax reform that we've seen in recent years. So the tax code has been changing constantly since I've been practicing, and it's a lot of fun to get to keep up with all of these changes, but it makes it difficult for you guys sometimes. So what we wanted to do today is just give a high level overview of some of the things that are in House Bill 8. We're not trying to get into the particulars because that is something that we don't always have at this point in the process. But any questions you have, I'm happy to answer any questions. You can reach out during this or afterwards, whatever works for you. So a little bit of background on House Bill 8. So this bill was introduced in February, on February 25th. And a lot of the elements of this bill were based on a tax foundation report that was put out in conjunction with the chamber. And that came out in late 2021. So when the bill hit, there was a lot of support for the bill in the business community. Some other groups were a little bit more concerned about it because anytime there are tax cuts, certain issues come up. But Unsurprisingly, the bill did very well in the General Assembly. It passed the House, it made it to the Senate. There are a couple of last minute changes that were made before it was ultimately passed, but it was sent to the governor on March 30th. And again, unsurprisingly, the bill was vetoed due in part to the individual income tax cuts that we're going to talk about. But even though that happened on April 8th, it was very quickly overridden. So on April 13th of this year, the veto was overridden and House Bill 8, became law. So let's talk about what the changes were that were in this bill. The change that's most likely to impact everyone that's on this call, even though it's not necessarily the biggest impact for businesses in your day-to-day operations, is the individual income tax cut. So as the bill was originally introduced, there would be a automatic 1% cut that was made starting with the 2023 tax year, and then gradual cuts after that if certain revenue measures were met. That's not what was ultimately passed. What ended up passing was a set of revenue triggers, and if those triggers are met, there will be a 0.5% reduction. And the 2023 tax year is dealt with differently than subsequent years. So what are the revenue triggers? We're not going to go into the various different definitions that are in these triggers, but basically 2 requirements have to be met before there can be an income tax reduction as the bill was passed. So first, the amount of Kentucky's budget reserve trust fund has to be equal to or greater than 10% of the general fund receipts for the fiscal year. So that's requirement number 1. Requirement number 2 is that the amount of the general fund receipts for the fiscal year must be equal to or greater than appropriations, plus the amount that's equal to or greater than a 1% reduction to the individual income tax rate. So there's lots of complicated definitions that go along with that. But what it means for you is that in September of each year, the Department of Revenue is going to take a look at these triggers and see whether or not a reduction has been triggered. For the 2023 tax year, the Department of Revenue is going to meet in September of this year, and they'll be looking at 2 years of data. They're going to look at the 2021 and 2022 tax year, but as a result of some changes that happened shortly after House Bill 8 was passed, they'll also be looking at 2020 and 2021. And for 2023, if those triggers are met when they look at those previous tax years, then we'll go ahead and have a reduction. The General Assembly doesn't need to get back involved. But for 2024 and subsequent years, even though the Department of Revenue will look at these and they'll say, yes, we've hit the revenue triggers, or no, we have not, before any subsequent reductions will happen, the General Assembly will need to approve those reductions. So as it stands right now, it looks like we will certainly hit the first reduction for 2023. We'll probably hit it for 2024 as well. So in that situation, by 2024, we'll be looking at a 4% individual income tax rate versus the 5% individual rate that we have right now. So there's lots of good things that can come from this change. It makes it easier for the state to recruit people, to keep people if they're paying less in individual income tax. But there are some trade-offs that we're all aware of. If we are losing income from individual income tax, we need to make sure that that income is coming in from somewhere else. And that leads to some of the changes that we're going to talk about in other tax types. But even though we did make these changes on the individual income tax side, it's important to note that this year there was not an equivalent reduction in the corporate income tax or the LLET. So it's only for individuals right now. So the next thing that I want to talk about are the changes to sales and use tax. And here there were some pretty major changes. So most of you will remember a couple years ago, there was at the time a fairly significant increase in the tax base for sales and use tax when Kentucky decided to tax a number of additional services. So at the time you had veterinary services, landscaping services, and several others that were added. And there was a lot of concern about that because Kentucky has historically limited the number of services that have been subject to tax. But this year, there are, depending on how you categorize the changes, there are 37 new services that will be subject to tax. So the tax base is changing pretty significantly, but the rate is not. We're still using a 6% sales and use tax rate. And I was going to originally mention this towards the end of the presentation, but you probably also heard that there was a push this year to reform local taxation. And one of the things that would have been done if it had passed was creating a ballot measure for a constitutional amendment that would allow the localities to put in place a local option sales tax. And if that had passed, then this expanded state sales and use tax base would also be expanded for the locals. But ultimately that did not pass. So you won't be seeing that on the ballots next time you go to vote, but something that could come up again in the future. So what are these 37 new services that are going to be subject to tax effective January 1 of 2023? It's a long list, so I'm just going to briefly mention some of these just for the sake of completeness. One is photography and photo finishing, marketing services, telemarketing services, public opinion and research polling, lobbying, executive employee recruitment services. A lot of changes with web-based services. So website design, development, and hosting will now all be taxable. Facsimile transmission services, private mailroom services, bodyguard services, residential and non-residential security system monitoring, private investigation, process service, repossession of tangible personal property, personal background checks, which is one that businesses might encounter fairly regularly, parking services, including valets and parking lots. This does not include parking at educational institutions, which I know is a relief to a number of students and their parents. Road and travel services provided by automobile clubs, so AAA services. Condo timeshare services are now subject to the sales and use tax. A big one that will impact a lot of businesses and individuals, the rental of space for meetings, conventions, weddings, banquets, any of those short-term social event type rentals is now subject to tax. Social event planning and coordination services are going to be subject to tax. Recreational camp tuition is going to be subject to tax. Personal fitness training will be subject to tax. Massage services, which was one that was near and dear to my heart, that will be subject to tax unless it's medically necessary. Cosmetic surgery, body modification, those will be subject to tax. Testing services will be subject to tax, although there's a pretty big carve out here for medical, educational, and veterinary testing. Interior decorating and design, household moving services, specialized design services, lapidary services. One that is an impact for a number of businesses, particularly restaurants, labor and services to repair or maintain commercial refrigeration equipment and systems. And this is going to be the case even when there's no tangible property that is sold in conjunction with the transaction. So service calls will be subject to tax, any sort of trip call. Labor to repair or alter apparel, footwear, watches, jewelry, those will be subject to tax. Pre-written computer software access services. Admissions to nonprofit historical sites, which this one actually had a specific exemption prior to House Bill 8. And another one that will impact a lot of people, non-primary residents, sewer services, water, and fuel. So, those are going to be taxable at the business level. If you have a vacation home, a small cabin, a lake house, anything like that, the services to that, if it's not your primary residence, will now be subject to sales and use tax. So that's a really large number of services that are now going to be subject to tax. And this is all part of Kentucky's push to move from income-based taxes to consumption-based taxes. Where a lot of businesses are going to have questions is, well, okay, here's this definition. Very few of these terms are actually defined in House Bill 8. What does that mean for my business? How is the Department of Revenue going to interpret this? And in large part, the answer is we don't know yet. So it'll probably be later this summer, if not even later than that, before the Department of Revenue begins to issue regulations or other guidance that will discuss how they're going to interpret some of these provisions. So for example, it may be that with respect to massages, that you have to have a prescription from your doctor, which is not an uncommon practice. You see that with insurance sometimes. For photography services, there's already a reg that discusses, when certain things are subject to sales and use tax. That one will probably be expanded. We don't know exactly what that's going to look like yet. For interior decorating and design, well, design's a really big, it's a big term. What does that mean? Is it going to interpret, is it going to be interpreted to include architectural services, for instance? The answer is probably not. There was discussion when the bill was being drafted about what professional services are going to be included, but it certainly is not outside the realm of possibility for the department to put together some pretty aggressive positions on some of these, or maybe they'll take very lenient positions. All of that's something that we'll probably start to see later this summer. Now, one thing that is important to note is that this is not a situation where we have one instance of doing something that triggers a sales and use tax obligation. There is a de minimis threshold that is set in House Bill 8. That threshold is currently $6,000. So if you have not otherwise triggered a sales and use tax requirement, you're not selling personal property that is subject to the tax, and you keep your receipts under $6,000 for any of these services, then you're not going to be required to register, collect, and remit. When you go over that threshold, you will need to do that. If you have a business that has multiple locations, you also want to be cognizant of the fact that when you go to register for your account, you might need to register for multiple accounts. You'll need one for each location potentially. So something to keep in mind. Also, make sure that you are registering for your account before you need to start making your collections. You don't want to get into a situation where you're in March of next year and all of a sudden you realize that you should have been collecting because you're going to exceed the $6,000 threshold. It's always easier to take care of that on the front end. So give yourself a little bit of a grace period, especially because sometimes the one-stop portal, which is where most organizations will register through, just like any other website, sometimes it has tech issues. So don't wait until the last minute to do this. Another area that we see a lot of questions about in my practice is the upcoming tax amnesty program. So Kentucky has historically done an amnesty program about every 10 years or so. And one was proposed very early on in the session in House Bill 176. And then when House Bill 8 was first introduced, they rolled in all of that language from 176. So what the amnesty program will do, just in general, it's going to allow taxpayers the opportunity to come forward to report anything that has been underreported or not reported at all, and to clean up their Kentucky state level tax liabilities. If you qualify for the program, you can qualify for a full waiver of the penalties and fees, and you'll get half of the interest that has accrued waived. So when is this going to happen? Well, it's uncertain. So the Department of Revenue has historically administered the amnesty programs. And this year, it's going to be potentially a little different. House Bill 8 had a lot of language in there that talked about outsourcing the amnesty program to a third party. So there's an RFP process. There's strict time limits that are imposed in the RFP on when a third party would need to get in and have notices mailed out and things like that. Assuming that a third party is procured, the amnesty program is going to run from October 1st of 2022 to November 29th of 2022. But if the Department of Revenue is not able to find a third party that meets the requirements within the time frame set by House Bill 8, then the department is going to administer the program, which again, they've done that historically. But if the department is going to be the party that will be administering the program, it's going to get pushed back until sometime in 2023. So we won't know for a while what the exact dates will be. But regardless, it's going to be a 60-day period where you can come forward and make your amnesty application. And the time frame that will be covered by the taxes or by the amnesty program won't change either. So right now, you'll be eligible to participate in amnesty for state tax that was due on October 1st, 2011 through December 1st of 2021. So anything from January of this year, for the month of December of last year, those dates are not included, and anything from 2022 is not going to be included. So, you know, we've got taxpayers that have been historic non-filers. Some of their outstanding debts go back to the previous amnesty period. You know, anything prior to that is not going to be dealt with in this particular program. You're just looking at a very defined period of time. So, like I mentioned, not every tax is going to be eligible for amnesty, although most will be. The amnesty is going to apply to taxes, penalties, fees, and interest that are collected by the Department of Revenue. So real property taxes are not eligible for this program. If you have personal property taxes, the state portion could be eligible, but not the local portion. So you want to think about that when you're deciding whether or not you want to participate in the program. There are also some other limitations. You won't be eligible to participate in the program if you're under criminal investigation, for instance. But if you are under audit, if you've got an ongoing protest, if you're in litigation, all of those can be dealt with through the amnesty program. And so that may end up looking like a settlement. It may look like a traditional amnesty application, something you want to talk to your advisors about. But the door certainly is open in those situations for you to participate. This is not like the voluntary disclosure program where you can't have any communication with the state prior to participating. It's very important that you participate in amnesty if you can. There is a requirement that you file the returns that are due to participate in amnesty. You've got to pay what's due. And if you don't participate in this program, you can get increased penalties. And this has been the case for historic amnesty programs as well. Kentucky will send you out a bill that will specifically list an amnesty penalty on it. And those penalties can be pretty hefty. So we want to make sure that if you know that there's an outstanding tax liability, that we're trying to participate in this program. Kentucky has always been aggressive in applying the amnesty penalties. So, even though you may find yourself in a situation where you're able to get those removed based on the discretion that the Department of Revenue has, hazards of litigation, things like that, you don't want to have to fight that fight if you don't have to. And again, you're saving interest by participating in this program. So it's certainly a good opportunity for a lot of taxpayers. Another area that we've gotten some questions about, and that impacts a lot of individuals who work on the local level, are the changes to the transient room tax. So House Bill 8 expands the transient room tax. The base is now going to include any person that facilitates the rental of accommodations. This is going to include brokers, people who are involved in coordinating or otherwise arranging. So what this is ultimately going to do is it's going to expand the tax and allow it to be imposed on online travel companies and Airbnb. For those of you who work in this space, you'll remember that a couple of years ago, there was some litigation. A lot of it came out of Louisville and Lexington, where the courts ultimately determined that the way that the bill or that the existing legislation was written, you couldn't reach these online companies. And of course, any of us who have booked travel know that more often than not, we're probably not booking direct from a hotel or motel or one of the businesses that was explicitly listed in the transient room tax legislation at the time. So the changes to House Bill 8 have fixed that and allowed other businesses to be brought in, which really evens the playing field a bit. Now, none of these changes will apply to any rentals that are for a continuous 30 days or more. That's consistent with the way it was treated before. And there have also been a couple of definitional changes. One of the things that was made more apparent by the changes to House Bill 8 is that we're not just talking about hotel rooms here. You know, cabins are included, campsites are included, tourist camps, campgrounds, recreational vehicle parks, and any other place where accommodations are regularly furnished. So, you know, it's much clearer now that this can be imposed on significantly more businesses. So while a lot of the other changes that we have talked about are first going to go into effect in January, this one goes into effect earlier. So these changes will be effective on August 1st of this year. House Bill 8 also imposed several vehicle-related taxes, very different from each other, but I've sort of lumped them all together here. In all of the sales and use tax changes, one thing that was removed as a taxable service when you're first looking at the bill are limousine services, but they're not escaping tax, they're just being moved to the new vehicle-related taxes. So beginning on January 1st of next year, House Bill 8 is going to impose a 6% excise tax for the privilege of providing a motor vehicle for sharing or for rent with or without a driver. So this is going to impose the tax on the rental of limousines, peer-to-peer car sharing, which is a term that is defined in the bill, taxis, transportation networks, and you drive it companies. So this excise tax can be passed on to the user. So that's a benefit to companies, and it's going to be remitted to the Department of Revenue each month. And with this tax and with a number of other taxes that are excise tax based, there is personal liability that will apply to the owners of a business or to those that are responsible for the collection and remittance of the tax. This is just like sales tax, so something to keep in mind. The tax that is vehicle related that has actually gotten the most press is the taxes and fees that are now going to be imposed on electric and hybrid vehicles. So beginning on January 1st, 2024, this was originally 2023, but a subsequent bill, House Bill 659, it pushed back the date. So beginning in 2024, there's going to be a charge of 3 cents per kilowatt hour that's going to be imposed on electric vehicle power that's distributed by an electric power dealer. So those are all defined terms, but think about where you have a parking garage or a grocery store. You know, I know when I used to live in Lexington, there was one of these at the Meijer in Lexington. You know, you can go, you can park your car, you can plug it up, you can charge it. There'll be a fee for that. So now there's going to be this 3 cent per kilowatt hour charge on that that's going to be collected by the dealer. The dealer is going to be subject to all of the personal liability requirements that currently apply to the sales tax, just like with the other tax that I just mentioned. And there's also going to be a 3 cent per kilowatt hour surtax that would be applied when you have electric vehicles that are charging on state property. So you got the dealer fee that's going to be imposed when you are charging your vehicle outside of your home, but there's also going to be a registration fee that will apply to owners of these vehicles. And the fee is different depending on whether you are a full electric vehicle or you're a hybrid, and it applies to electric motorcycles as well. So at the time of your initial registration, when you get the vehicle, you'll go to the county clerk and you will pay a $120 fee if you are an electric vehicle and a $60 fee if you have a hybrid vehicle or an electric motorcycle. And you will pay that fee each year thereafter when you go to, update your registration. So this fee it's beneficial in a lot of ways because, as I'm sure most of you are aware, a lot of the revenue that comes from or that goes to do road improvements in the state of Kentucky, it comes from registration fees and the gas tax. And of course, these vehicles are not using gas in the same way that many of our vehicles are. So this helps recoup some of that money. So half of the fees that are collected are going to go directly to the road fund. The rest will go to the general fund. And as I said, this will go into effect on January 1 of 2024. A couple of other changes I want to mention that were included in House Bill 8. The Internal Revenue Code conformity date was updated. Now, this happens regularly in Kentucky. House Bill 8 originally updated to December 31st, 2021. It didn't have any specific language about extenders, and it specifically decoupled from the federal treatment of restaurant revitalization grants, which are non-taxable grants that were made available to restaurant owners as part of the COVID relief bills that had been passed. House Bill 659, however, made some changes to this. The conformity date was left as December 31st, 2021, but specific language was added, making it clear that to the extent that there are subsequent bills that pass that just extend existing positions that were in the Internal Revenue Code on December 31st, those are all included. And it also removed the decoupling from the federal treatment of the restaurant revitalization grants. So, this is a win for Kentucky restaurant owners because if you received one of these grants, they're now going to follow the federal treatment and will not be Kentucky taxable income. There are a couple of other changes that were made in House Bill 8. I just want to briefly mention these. I'm not going to go into any detail on them. There is a decontamination tax credit that is now available. It's an income tax credit, really put in place to help with the cleanup of brownfield sites. So something to think about if you're doing any work in that space. The historical rehabilitation tax credit has been increased. So that's a good thing for Kentucky taxpayers and for those who are interested in historical preservation in general. Another change that we've actually gotten a fair amount of questions about in our practice involves public service companies. So public service companies are going to really benefit from a provision that was added in House Bill 8. Basically, it says that the Department of Revenue has a year to resolve any protests that are pending before it. So if you are a public service company, you file a protest, the department either has to settle your case, otherwise resolve the case. Basically you reach an agreement on what the tax should look like, or they need to issue you a final ruling. If they do not do that within a 1-year period, then this bill will now require the department issue you a final ruling, and that final ruling has to be one that accepts the positions of the public service company. So that's a big win for public service companies and will help with some of the backlog that is currently at the department. These are complicated tax returns. So if you work with public service companies, if you are a public service company, definitely pay attention to this because there could be some, really good tax savings opportunities for you here, especially if the department is not timely in resolving your protest. A couple other things I want to mention that were not in House Bill 8, but I think, are things that have gotten some press and that we might want to talk about. I already mentioned that local option sales tax did not pass, but one thing that did pass was House Bill 8, and this is the one that froze vehicle property tax values for 2022 and 2023. So, this has been in the news quite a bit. If you paid before the freeze went into effect, then you should be receiving a refund. If you are one of those lucky people who didn't have their taxes due until after this passed, then you'll be paying your property taxes on your vehicles at a rate that doesn't include the increased valuation that we've all seen because of part shortages, vehicle shortages, all of those things that so many people are dealing with. So that should be a benefit for everyone who owns a vehicle that's on this call. So that was a really high level overview of what was in this bill. I hope it was helpful to you. I see we've got a couple of questions in the chat, so I'm going to hand it back over to Kate to go through those.
That was great, Rachel. Thank you so much. It was a really great summary of everything in the bill. I think especially the conversation on tax amnesty. We have a couple questions in the Q&A, and if you all want to ask questions, just drop them in the Q&A, and we will get to them. I'll start off with a question that I have just in general. You mentioned the Department of Revenue and their interpretation of the sales tax expansion. And also there's some question about when the window to apply for tax amnesty might open, depending on the RFP and who does it. Can you talk a little bit about how businesses can follow this evolving information? Will revenue come at the sales tax piece through regulations? Or will it be opinions that they'll issue? And then also the part about the amnesty, which I think, some businesses might be following. When will we know when the window opens to apply for that?
Sure. So when it comes to the sales tax changes, I think a lot of what is going to be issued by the department will ultimately end up being in a regulation. It's a long process, but from the time when the department first sits down and thinks about what a regulation is going to look like, to when it's first put out into the public for public comment, to when it's actually adopted. So we're looking at months in that situation. I think that, the chamber, I'm sure, will be putting out, some notices if there are major changes that will be impacting business owners in the state. You can sign up on the Legislative Research Commission's website to get notifications when there are changes made to regulations, and you can specifically do it for sales tax. You can do it for income tax. Most accounting firms and law firms will be putting out notices as well. So the important thing is really check your emails, read all of those client notices that'll be coming out from your service providers and from the chamber. And I assume that there will probably be some additional updates that will be made, maybe another webinar, depending on just how much information the department ultimately ends up putting out. They tend to do these in big dumps. So you're probably not going to get one regulation in 1 month and then two the next, and then maybe not any for a couple months. They'll probably put out a number of these all at once. So, that'll be sort of a stream that'll be coming. There will probably also end up being a Q&A type portion on the Department of Revenue's website. They did this when we had the initial expansion to include more services a couple years ago. If you get onto the department's website, when that goes live, which I assume it will, it's usually going to be right there on the main page. There'll be a link to another page, which is maybe a little bit more user-friendly than the main page. When it comes to amnesty, there's a lot of statutory notice that's going to go out. So while you can continue to monitor things that are being put out by your service providers, by the chamber, whether the service provider, the third-party service provider, or the Department of Revenue ultimately ends up administering this program, they're required to send out a notice to all of the taxpayers in the state that this is happening. So check your mail, because when we are getting close to the period, you will actually get a notice saying amnesty is happening. It's happening on this date. This is where you can go to find the application. So you'll have plenty of, old school traditional notice that will be given out for this program. And the department has a vested interest in making sure that you get this notice, because they are really hoping that they can bring in a significant amount of revenue with very little work. So, be looking for that. It'll probably come out probably late summer if we are able to procure a third party to do the program. I wouldn't expect it until after, January, probably, if we end up pushing this into 2023.
Got it. Okay. And of course, the chamber will follow these issues specifically and put information out on our news site at kychamberbottomline.com, as well as social media. So we'll be following too, but good advice there. A couple other questions. One about enforcement. Has a mechanism for sales tax enforcement been considered? Companies that are adhering to the program should know that companies and individuals that are violating the requirement are going to be held to account. So I guess that kind of falls in line with what you talked about going ahead and getting yourself registered. Should you now be subject to sales tax for the first time and getting ready for that? But what is the enforcement process in regard to that?
So generally speaking, the enforcement process, unless the department decides to do something differently than they have in the past, is really going to be the sort of traditional audit model. Generally speaking, the way that most taxpayers who are not already registered for sales and use tax, the way they get caught by the state is that one of their vendors gets audited and they provide a list of the people that they work with to the state. And then that sort of spider webs out. And that's how a lot of organizations get caught. Another way, and it's really not a very effective way, is that when you register a new business with the Secretary of State, the Department of Revenue is going to get a list of all of those new businesses, and they'll send you a letter that says that you need to register. But if you don't, there's generally not a lot of enforcement that is done. And part of the reason for that is that the Department of Revenue is just very understaffed. They're just like so many of you on this call. But if you need to be particularly aware of your responsibilities with sales and use tax, because if you do get caught, which, even though we're sort of behind on the audit cycle right now, the department is ramping them back up. When you get caught, there is personal liability that applies in sales tax, which is not the case when you're talking about your corporate income tax generally. So, you want to make sure that you are being proactive, and, the sales tax is not where you want to try to avoid paying your taxes. And there's really not a lot of ways where you can, report someone who is obviously not complying with the law. But I imagine that there will probably ultimately be some sort of, segmented enforcement. You might see, more enforcement for, photography in one sense. Maybe they'll do a round of audits that include, businesses that, have some of the vehicle related taxes or medical providers, but ultimately it's going to be hit or miss.
Okay. And then we have a question about the reduction in income tax and the thresholds. So if the revenue thresholds for reduction in income tax are met, will those tax rates be effective for the next year, or do they go into effect when they make the determination when they meet in the fall? And so I think that first reduction is a little more automatic. They meet and they'll take the snapshot in September, but then after that, the General Assembly comes back in. So can you just review when those reductions will actually occur, assuming the thresholds are met?
Sure. So for 2023, if they meet in September of this year and determine that the thresholds have been met, then the rate change will go into effect for tax years beginning on or after January 1, 2023. If we then meet the threshold again for 2024, they meet in September of 2023, it'll be the same thing. It'll go into effect January 1. So even if the General Assembly didn't get around to approving it until March or April, it should be retroactive to that tax year. So you might get several months into the tax year without knowing whether or not the General Assembly is going to approve that tax break. But I think it's unlikely that you would find yourself in a situation where we hit the triggers, that we haven't had press talking about the fact that we're going to hit the triggers, and then have the General Assembly say, oh, that's great, but not this year. That's just not likely to happen.
So I promise you the chamber will be advocating for that reduction should the triggers be met. So We will be talking about it quite a bit. Absolutely. So one of the things that came up is that the individual income tax is on this path to reduction, the path all the way to zero, but it's not coupled to the corporate income tax. Do you have any thoughts on businesses and whether they might restructure because of that? Or do you see this reduction in individual income tax that, businesses are going to look at so many other things that are, paying the corporate tax and are C corps and may not necessarily restructure because of the changes in individual income tax?
I think, it's certainly something that businesses may want to look at. The vast majority of businesses these days new businesses are starting up as LLCs. So you're looking at personal income tax rate for all of their revenue anyway. But as the rates begin to just move further and further apart, there certainly may be opportunities for businesses to restructure. Right now we still have a relatively low corporate income tax rate, but if we drop down to a 2% personal income tax rate, it might become a lot more appealing to become an LLC or some other pass-through entity. So I think it's something that you want to have a conversation about with your own advisors, because there are plenty of things that are very beneficial about a corporation that you're not going to get as an LLC. And at the end of the day, the ability to have some of those reductions on the corporate side, some of those benefits, you might not need to restructure or want to, but it's so particularized to your business that you want to make sure that you're talking to your advisors. And another thing to think about is that a lot of the benefits to being a corporation come on the federal tax side. So, when you're talking dollar for dollar, it might make more sense to keep your federal savings or opportunities for savings. If you're looking at a business that is anticipating making a sale in the next couple of years, there are federal provisions that make it very attractive to stay a corporation. So it's something to monitor and something that you really need to talk to your accountants and your attorneys about.
Excellent. Case by case, certainly. One last question. I think it's probably pretty hard to answer. It was in there about expansion of the sales tax to other services such as legal services and accounting. I know that's always a discussion when we work on tax reform, and where might that expansion go? I think that's pretty tough to answer, but any thoughts on sales tax expansions further? Perhaps you work in other states that tax more services. I know at the chamber we advocate to not tax business to business services. It's a form of tax pyramiding, and it is not good tax policy. But just any other thoughts on those that may not have been captured by this expansion of the sales tax, and might there be additional expansions coming?
Sure. So, initial versions of the bill did include more services than what were ultimately taxed. And I think some of those were dropped in part because there were not as many definitions that were put into the bill as there could have been that would maybe reach the intent of the General Assembly to expand these services, but avoid the business to business tax that you just mentioned. So I think that it's certainly possible that there'll be some definitional changes that will occur in future years that will expand this a bit more. When it comes to professional services, I think that there's not a strong appetite for doing that right now. There are certainly a number of states that do tax professional services. So it's not outside the realm of possibility, but I don't see it happening in the next few years.
Thank you. Well, Rachel, thank you so much for joining us today. I know there was so much to talk about in that legislation. There will definitely be further conversations that we'll be having. Be great to have you back on in the future when we know a little bit more about what's going to happen with the amnesty program, as well as the sales tax expansion and what the Department of Revenue may do, and maybe provide some additional resources and instruction for businesses that need to register through the one-stop shop for collecting the sales tax, and getting that alignment going before the start of the year if they're affected by that part of the bill. So I think there's a lot more to talk about. We're going to go ahead and wrap it up here. Thank you again for joining us, and please follow us at the bottom line for news about this legislation and other important news coming out of Frankfurt that affects the business audience. You can also follow us on social media as well. And so we will, of course, do all we can to put information out there and keep you all informed as we continue to implement House Bill 8. And you can check out Results for Business. I told you I'd put it in the chat. I forgot, but let me give it to you again, kychamber.com. I think you can remember that, and you will find Results for Business on the main screen and learn all about what the General Assembly did to help businesses this past legislative session. So with that, thank you. Thank you, Rachel. Thank you to everyone for joining us, and have a great day.
Thank you, everyone.
Take care.